Hello everyone, welcome to Stocker Team, the investors channel. Today, the 20th of March 2025. Before we just go ahead to discuss today's topic, we'll just make a quick disclaimer. Every information shared on this channel is for education and information purpose only. So do your due diligence or speak to your financial advisor before making any decision. And on that note, thank you so much for joining us today. It is a pleasure to have you here. For all of us who have joined our channel, who have subscribed to this channel, thank you so much. If you haven't subscribed, subscribe to the channel. Put on your notification bell so that you don't miss any updates. Also follow us on X, which is at Stocker Team Live, as you can see on the screen. We share all the breaking news, all the major analysis, and all the information that you just need to keep tabs on to just know what exactly is going on with your money or your investment and how the market is behaving and what you should be doing. So the topic I would like to discuss today for today's show is actually an IPO, which is initial public offering. So basically, initial public offering is when a company which basically a company has been in private hands or private ownership for a while, or many years or a few years, and the company feels they want to actually basically increase the ownership structure of the company. They want to raise new capital. They want to also more or less grow the business and have access to better guidance, better management, better corporate structure, corporate governance. And so what that company does is to actually oftentimes do what we call IPO, initial public offering. And that is when the company actually raise money from the general public for the first time. So there's an IPO coming up, and that IPO is for CoreWeave. The IPO is likely to happen between in the next couple of days or in April, as soon as the final approval from the SEC, which is the US Security and Exchange Commission, as soon as the company gets that approval. So today's episode, I'll be breaking down this IPO, what I think about the IPO, the risks involved in the IPO, the opportunities, as well as what I actually think, if this is a buy or not. So let's get into today's show. So basically, CoreWeave is a technology company. CoreWeave basically was founded in 2017, and the company used to actually bear the name Atlantic Crypto. They were based in Roseland, New Jersey, in the US. Basically, they started as a crypto mining company, basically to actually mine Ethereum, which is perhaps the second largest cryptocurrency behind Bitcoin. In 2019, the company actually switched its strategy, pivoted into AI cloud computing by providing graphics processing unit infrastructure for companies. So between that time and now, the company has really evolved from being an Ethereum mining company that I spoke about to a leading provider of hyperscaler for AI infrastructure. They operate about 32 data centers. CoreWeave actually targets about $30 billion for the IPO. So like I said, the IPO is likely to happen towards the end of March or early April 2025. So in the next couple of weeks, we'll be having this IPO. CoreWeave was founded by the tripartite group of people. Michael Intrantor, who was the CEO, who is the CEO actually, Brian Venturo, who is the Chief Technology Officer, Brandon McBee, who is actually also managing some other aspects of the business. They basically blend their experience in trading, technology, and systems architecture in terms of what CoreWeave actually has going for itself. The company actually has that knowledge, especially the people behind the company. They have that knowledge of high frequency trading, especially because of their crypto background. One of the founders, Venturo, is from Risk Focus. The company was sold in 2020. Just giving you a background so that you can actually know the people behind the company. So the person in charge of the operations is the third person, Mark B, who is actually having very strong experience in tech operations. And now the company really has shifted towards very deep into AI infrastructure, service provision for big tech companies. So majorly when this business started, when CoreWeave started, up till now, the company has raised about $13 billion plus, majorly in a combination of debt and equity. And for many of us who are actually asking a question, which of the big tech companies are actually behind CoreWeave? Because it also matters. If you have the big companies behind the business, it might actually be an opportunity for growth. So the likes of Nvidia is actually strongly behind the capital that this company has raised in the past and recently. This company really has perhaps one major client, which is Microsoft. They also work for OpenAI, the makers of ChatGPT, AI Chat, and also Meta, which is the parent company of Facebook, Instagram, and WhatsApp. So that's basically the company. I'm going to be looking at some other aspects of CoreWeave as a company and also as an initial public offering as an IPO. So if you have actually watched it to this point, please, we want more subscribers on the channel. We are very, very happy that you can join us. You can keep watching all our daily updates, daily episodes. So please, if you haven't subscribed to this channel, please subscribe, put on your notification bell. Also join us on X. I'll be moving forward now to the valuation, the opportunities, and I will close the chapter on this CoreWeave IPO with the guidance. So let's just get into it. So now looking at the valuation for this IPO, basically how much is this company CoreWeave looking to raise? CoreWeave in the IPO filings that was released about 2 weeks ago, the company is looking to raise about $2.7 billion. They will be selling about 49 million shares, and the price, the opening price for that IPO, the day it starts trading, under the ticker symbol CRWV, Charlie Romeo Whiskey Victor. That's the ticker symbol, as you can see on the screen. The price will be between $47 to about $55 per share. The actual opening price that it will trade at will actually be confirmed on that day, and it will be listed on the Nasdaq stock exchange, which is the tech heavy stock exchange, the second largest stock exchange in the world. Actually the largest, really, because the likes of Nvidia and Apple are actually there. The valuation wise, this company is looking to value itself with this price and what they are actually looking to raise at about $30 billion. Now, just to let you know, it's a downward revision from $35 billion, which the company actually gave out before. So the company is also already tweaking with the expectation of growth, and they actually want to see whether they can price it better to make it more attractive. The revenue for the company in 2024 was about $1.992 billion, and that was 8 times what the company made in 2023. In 2023, CoreWeave reported about 228 million point nine $228 million. So the company actually multiply its actual revenue by 8 times in 2024. CoreWeave really, in terms of profitability, they achieved operating income of about $324 million dollars in 2024. But however, this company is not making profit yet. So, and this is part of the most important part of this analysis I'm trying to do. The company is still in a net loss as at 2024 full year of about $863 million due to about $941 million in interest from the $8 billion this company has in debt. So now this company is already in debt to about $8 billion, and it is also in a net loss, I will repeat again, of about $863 billion. In terms of some of the risks that you have to look at, I'll quickly talk about this as well. Out of the $1.92 billion that the company made in 2024, at least about $1.19 billion dollars came from Microsoft. So over 77% of this company's revenue is coming from just two clients, which is a concentration risk. So if Microsoft says they are backing out or they are reducing their business, their contract to CoreWeave, that is a huge risk. We also heard that Microsoft was also, reneging on some of its commitment that it made to CoreWeave. So those are some of the risks as an investor that you have to actually look at. In future growth wise, this company has a backlog of about $15 billion in unfulfilled contracts. So there's a backlog of contract that this company is already having to fulfill, and about $11.9 billion in deal that they are looking to fulfill with OpenAI, which actually signal that this company has some strong potential. The business model for this business, this company CoreWeave, is they have about 32 data centers, like I said, with over $250,000 of NVIDIA GPUs, which is basically the company is trying to capitalize on the AI boom, and so that's exactly what this IPO is looking at. For me, now this is where I'll round it off on the IPO for CoreWeave. It's a very interesting IPO. Personally, I don't necessarily buy IPOs for short-term trading or short-term exposure, or you just want to actually gain from the momentum of the excitement. IPO might not be actually a bad one. However, if you're looking to buy and hold the stock for 3 years to 6 years to 5 years down the line, the IPO period might not actually be the best time to buy. You could actually wait to about 3 month to 6 month period before you can actually make any buying decision. So that's why I also think the fair valuation for this stock will be around $25 per share, because of the heavy debt exposure. I see this company actually more or less losing close to about 40% of its valuation. But from a momentum point of view, a short-term trading point of view, yes, this might be a better way to actually make a few gains in a few weeks or thereabout. But it's not something you actually want to buy and hold for too long, especially when the company has not even spent 1 year as a public company. So you have to actually be very careful if you're buying as a long-term investor. If you look at what happened to Rivian was actually listed at almost about $100 per share, and today Rivian is less than $30 per share, or even far less than that. So you actually have to be very careful on IPO stocks, because a whole lot of things don't get cleared until these companies actually come to the public, and you can see all the information being disclosed quarter on quarter, year on year, anytime you actually want to get more information as an investor. So if you have watched to this point, I have an update on what is going on in the market. So just come with me. So I have been getting a whole lot of feedback. What do I think about the sell-off that happened in the last couple of months on Wall Street, on US equities, US stocks? But from what I see, I think the worst has actually past us. I think we've actually bottomed. If you look at the chart in front of you, is showing you the S&P 500 and the Nasdaq 100 index. You can actually see that when the market was at its worst moment was actually last week or a few days before last week, and that was March 13th. So we bottomed in March 13th, and you could actually see that we've actually seen a pickup in terms of more people buying back some of the shares they've sold or buying them at a more cheaper rate as we speak. So for me, I think the fears that the market has about the Trump tariff, fears of inflation and all that was actually overblown. If you look at the last 1 year, you could actually see that nothing spectacular has actually happened, except especially when you look at last year August, when we had the carry trade in Japan that actually pulled down the market. So we didn't even get to that point, even when we thought it was very bad this year. So if you actually see the market has actually started recovering. If you look at the last 5 days, that recovery is actually now very, very more pronounced. You can actually see that the chart is showing that there is a pullback into the positive territory. In the last 5 days, the market is now positive. The S&P 500 has done well over 1.3%, and the Nasdaq 100 has done over 1.2%. So the S&P, the Nasdaq is now showing that positive territory. That's why you see the market moving to the upper part of the valuation. I see a full recovery in the next 1 month when we get another inflation read. Inflation read in the US shows that inflation in the US is actually pulling back. Yes, the tariff might be a problem, but I don't necessarily see it as a major fear point for us to actually worry again. So thank you so much for watching today. We've spoken about the CoreWeave IPO, why we think there are opportunities, the risks involved, and why you should actually be very careful if you are a long-term investor and looking to hold the stock for the long haul. You also have to actually look at how IPOs actually behave over time, especially in the tech ecosystem. So if you haven't subscribed to our channel, subscribe, put on the notification bell so that you don't miss any update. Till we meet for another episode tomorrow, keep investing, keep growing, take care, and bye bye.